Okay guys, I'm going to go do a quick cable trade. It's not the best. In fact, it's, well, let's just call it a bit naughty, shall we say. Because the market itself, for all its looks pretty darn strong to the downside. And it is. It's also very careful because it's incredibly stretched. Let me just put my smaller head on so you can see it. It's incredibly stretched. So the target is only 4 pips. Now, it's actually jostling between 4 and 9 pips, depending on where you're sitting. Because the +1, -1, which is a multi-time frame analysis, is telling you to be careful. And it's careful because it's starting to weaken. So I maybe get a shade more than that, maybe 5, 6 pips. So in this scenario, normally I wouldn't take the trade. I normally wouldn't take the trade at all. But we are bouncing off a level. We are clearly pushing down, and it could come back down into here. So the chances are I could get about 5 pips out of this. So that's what I'm going to do. So I'm going to put the order in initially here. Okay. Now, just in case it runs, I'll drop it into 10 pips. Now, I have been trading with this on another account this morning, and I've been catching the waves as it goes, and I've done okay. So I'm all right with that. So I've got 36 quid here. Get another quid, a few quid out of this if I can. And this is one of the things. Steady steps will win the day over and over. Every single time. Now, I've already told the guys in the Discord exactly what it is that I'm doing. If they come down into Trader Talk, that is there. Broke it all down for them so they can see it. And I've been watching it this morning, because the guys themselves are actually doing it in here. And really, I'm doing it because of these two here, John and Cully. They've been talking backwards and forwards about it. So I always feel compelled to help. And we'll see whether that sort of helpfulness gets returned in helping me. Who knows? But in the instance, what we're looking at here is there's a good reason why I keep my order here. It's because if I press the button, I've got nowhere to go. I'm in it. I'm stuck with it. That's the end of it. So the first thing I need to do is understand what this market is trying to achieve. Now, this is a 15-minute chart. If I drop it down into 5 minutes, you'll see I'll be able to edge that up a little bit better now onto there. Okay. So the higher I can get it up, the better, then the easier this 10 pips becomes. But let's just look at it for an instance. There is the makeup of your trades over sort of the last couple of days. All right. It's pretty much sideways. It's coming off the top, so it'll naturally look to go to the bottom. Now, we do have barriers in its path, which are these things. So let me just take these off because I'm going to put some of them back in. So the first thing I need to do is look at a structure point. What created what's going on? Well, the first thing I can see is this here. It's a huge drop, singular motion, and it's nasty. So that single candle on its own, just the candle that is, will show me some reaction points. Right, well, what are the reaction points? Well, I know it'll run to 50%. It did that. Okay. If it holds above the 50, it'll run to where it came from. Well, it did that. If it breaks through, it'll look to try and get to 127. Well, it did that, but then it stalled. So its natural recurrence will go back to where the other levels are. Now on this, because it's the expansion, it will just show the 50%, which is here. And it's done it. Now it's holding above the 50%, so there's a little bit more sentiment to the upper side. However, we are pulling down. Okay, so that sideways market is now in play. All right. Now, if that's the case, it'll push down, maybe it's back onto here, and then rise up as long as it's staying above the 50. If it breaks this yellow, it'll look to come here. The same as what I've just discussed about going back to where it came from, an expansion, but in reverse. But at the moment, we're dealing in the top section. Okay. So if that's the case, I now need to sort of look at where its feasible levels are for entry, exits, etc. Well, I can do that on a 15-minute chart. What can I see in the last 15 minutes? That was big, nice big sort of here. All this is income. I've got an engulfer here, but that is a sustained move. That looks pretty good. All right. So what I'm going to do for this particular exercise is just look at that. Okay. Which is there. Now, what you can see is good areas of entry exit. Well, we've just entered on one, which is here, which is what I was looking to try and get to. The higher it got up, the better. Then it can come down into this, then down into there, and then eventually to the bottom. Okay. Right. What if I'm wrong? Where am I wrong? Well, straight away I can see a swing point and I can see a barrier. So I'm wrong here. This section. And if I'm wrong at this section, that means it's going to run and it can look to the higher point, and then I'll have a real problem because I'll have to bear it all the way up here. Not something I want to do. All right. General shift to the downside. There are some flurries to the up, but the angle of descent is down. So as far as I'm concerned, I'm pretty much okay with selling this based on a bounce of that. Should have got in on that blue line, got in a bit sharp, and then I'll get out. So it said 4 pips. What's that? Well, that's 8. That's 3.5. So what we're going to do is we're going to kind of go to there. 8 pips is about right. That's it. That's trade made up. It's diagnosed. Figured out which direction I'm going in. And now I'm just going to stick with it. All right, let's play it out. Okay guys, that job is now complete. It's come down, it's bounced into the areas that I thought, pushed down, got a couple of positions in, so I'm quite happy. Just make certain my tickets, I did delete them, and then there you go. So I was setting out for a half decent sort of trade, maybe 5 pips. So if I only got one position in at 25 quid, but we've actually ended up getting 93. Now, to me, this is why staging and sort of working the chart comes into play. If you just look at it and you think, right, poof, in we go. What can you do? Nothing. You're in it. You can't add to it. If you do, you're essentially adding to a loser because you're already used all of your position up. or you're now going to oversize it. And what if it turns round? Well, that oversizing will damage you. But if you stage it backwards, you're actually spending your money wisely. It's called dollar cost averaging. Now, I do this in investing. On what you've just seen, it's done in very small profile. It's called negative averaging. So you're averaging backwards to come forwards, and you end up getting a better price. Now, I'll always have the argument, and I have it every day, and personally I don't give a flying fuck, is, well, what if I only get one position in? I only made a little bit of money. Yeah. But how often does it happen? Very rarely you nail it on the head. And it's always from a gambler who says it, because they're chasing the cash. I want the money. I need this to make me an income. No, you don't need it to do fucking anything. You just need to follow the process, and the money side will look after itself. That's it. Most can't do it, which is why most people fail. But if you can do it, you're in with a shot. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.